Welcome to the Finance Story. Today we have with us Madhu Shalini Iyer, the partner at Rocketship.vc. She's got deep experience in data science, and Rocketship obviously has invested in leading high growth organizations both in the Valley and in Asia. Madhu's familiarity with emerging markets and developing economies has been accelerating Rocketship.vc's investment strategy in India and the SEA regions. Rocketship invests in companies pushing boundaries in data science and technology. We want to talk about all that. They've also invested in close to 50 companies, of which 7 of them were acquired. Madhu, how are you?
Good, Vishal. Good to meet you. Good to see you.
You started off in Sydney as an engineer. Did you move from India to Australia and then to the US? So let's capture that quick bit of history, the inspiration of data science, and then let's get into the business aspects of it.
I consider myself a world citizen for sure. I was born in India. My father was in the Indian Air Force, and so we moved all over India. I did my year 10th standard in India in a KV environment, and I moved to Singapore, which is where my parents had moved, and I did high school in Singapore, and I moved from Singapore after my high school to University of Sydney, which is where I did computer science engineering. And then I came back to Singapore and worked for a very little bit before I moved to the Valley. That is when I really began to be interested in applied mathematics, which I'd taken a lot of courses in Sydney in applied math. I came to the Valley in the early 2000s and did a master's in applied mathematics way long back, and it was a part-time master's, and decided that there was just no looking back. I entered data science in 2003 actually, and it's been before the word was coined, in fact.
Before the word big data and everything came about, right? How did you get into data analytics as such, or data science as such, on the business aspect of it? Did you have such kind of an tuition or mentoring at work that brought you so far?
I worked at a organization called Exponent, which is basically a science and engineering think tank based out of Menlo Park in the US, in the Valley, in fact, where I still live. And that organization had a bunch of PhDs, to your point, and I was in the statistics and data sciences practice, and I think I was the only one who had a master's. In that entire 500 or 1,000 people organization at the time. I worked for some of the best minds, and that really was a defining moment. I was a senior scientist there, and like I said before, the word data science was coined, made a lot of contributions to the very early R, which not many people knew back then. And Python and things like that. So, there were some key mentors in that organization, PhD computer scientists and statisticians, who really framed the way I thought about problems, and my bosses there. Yeah.
How did you transform yourself to somebody who would get into business transformation?
Yeah.
Or then how did the VC thing happen? Because Absolutely. The founders of Rocketship come from great pedigree, right?
I've been very lucky. I've been at the right place at the right time many times. Just as I was telling you that how from a computer science engineering background to being a global citizen to my degree in engineering, to data science, to finding mentorship very early on in the Valley in a great company. What I realized was at that time when I was in the Valley, there was just a lot of, there were a lot of things going on. And suddenly, in the late 2000s, data-driven products, how do you sort of use data and to build products? That came about. And I realized that, at Exponent, as I was working and I was looking at different problems, the startup world was, again, just in the Valley, well within reach. Started attending these Python and R and SPSS sort of forums, and started getting exposed to a lot of business transformations that were happening with data. In that realm, I moved to Intuit. And, at Intuit, I realized that startups is where I just wanted to be. And instead of leaving, and when I came into Intuit, I was one of the early data science members, and was working with Mint and with TurboTax and with sort of QuickBooks, and realized that I really wanted to start a company or be a part of an early stage startup. I got to do that within Intuit, started QuickBooks financing. And again, that was a key moment of two things. It was it was FinTech 101, early 2009, 10, 11, when it had all just kind of started. And it was also data driven products. So started the business there, was one of the early members of this QuickBooks financing team. We grew that business very quickly to $250 million, and data was the front and center of that business, because how do you kind of give these customers of QuickBooks loans? And so it was sort of at the heart of the business, and there was just no looking back from there.
Anand is a data scientist. I know Venky also is a data scientist. I mean, they come from obviously a couple of companies that they sold to Amazon and to Walmart, right? And they had that pedigree. So when you meet such folks, what did they look for? How did you guys resonate?
And I'd done something in an emerging market, which was Gojek. I was after my stint at Intuit, I went to Singapore, which is where I'd grown up, and I was a investor, operating partner in a private equity fund out of Hong Kong, building and investing in fintech startups around Southeast Asia. This is 2015, so Southeast Asia was still really nascent. And what I realized that there was more needed and required to be an operator than an investor, and I decided to jump and become an operator at Gojek. I was a chief data officer. I started the Singapore office. I was on the board of directors. We raised $550 million. Became a unicorn startup. I was spending time, to your earlier introduction, I was spending time in Indonesia, in Singapore, in India, and it was just a really intense time. Basically just a boom that I saw. Came back to the Valley and started a VC fund of my own. And I was advising a few startups, and really I'd seen sort of I'd seen a boom in Southeast Asia. And when I came back here, I realized that it was not just the developed markets, but it was the emerging markets that really interested me as well. So I met Anand and Venky as I was evaluating companies in Southeast Asia. And actually, it was a company in LATAM that we were looking at together. Me from my fund, and they from Rocketship. And I believe that's how I met them, and we really met and bonded over a common sort of love for data, a common realization that was going to be the way forward for all VC funds, a common sort of understanding that global VC was here to stay forever, and a common understanding that we all wanted to be playing in that field, sitting in the Valley.
Rocketship has a database of about 15 million global companies, 1.1 million websites. And did Anand talk about this and convince you that, look, we are going to use data science to investing and not just go into the market and pray that our investments work out, right? That must have been a very good sell.
Going to the founding partners and my partners now at Rocketship, Anand, Venky, and Sailesh, they started the fund in 2014 with a $40 million fund. I joined them in 2019 with the $100 million fund. It was very clear. What I loved about them was the clarity of being able to use data, and actually using data to find the best startups is actually a very, very nuanced thing. Because you need to be able to ask the data the right questions. You need to be able to build algorithms on top of a huge database that is going to be able to, it's kind of like finding, a needle in a haystack. And these were the right people to do it. So it really is the data plus their backgrounds as well. We're all operators. We've all built companies, or we've all been sort of founders or in founding teams of very large companies. We've built together billions of dollars worth of companies. And to your point, coming back, all of that together, as you are an investor and a data practitioner, it is a feedback loop. Because when you build an algorithm to find the best companies without knowing what goes behind the scenes, it still is a gap. It's very, very rare to find investors who are also data practitioners, who are also company operators and builders. So, it was really, really I was lucky. We're all lucky to have found each other, and it's a great team. And we take our entrepreneurs really very seriously, because we've been there in their shoes as well. So that's what really completes the feedback loop.
With all this knowledge of data, and you go to a founder and say, look, we know something about you that you don't know. Do the founders get that? Do they get to loggerheads at times, or do you have to coach them saying, okay, look, we like your product. We know where we can take it with you.
So we are an outbound VC, which is very, very rare in VC. Most deal flows, most VCs are used to sort of deal flow coming, to them, or sort of it's really inbound. We find the deals and we go after these folks. And when we speak to founders for the first time, it's an entire journey. We tell them things about, what we know about them and how they've performed in our algorithms when we are speaking to them for the first time. And they are sort of amazed at, this approach, how much we know. It's really, really a very, very unique sort of perspective.
How do you convince both sides, right? One is the founders getting to know things from you that they don't know. One is the LPs believing in this kind of an approach, because you're not thematic at all, right? In the VC world, I've not seen this kind of approach. Is this a very novel way?
It was a novel approach when we started it. It's a very, very complex AI problem to be able to take, we have one of the largest startup databases in the world, to be able to take a lot of data, to munge it together, to sort of, make sure that it's uniform, build algorithms on top, train these algorithms, the Y variable, if you will, the output variable. What are you measuring, with all the input factors? It's a very nuanced problem. It's a very complex AI problem. We were certainly sort of one of the novel VC funds to have started it way back in 2014. We were also one of the first ones to realize that there was a lot of activity happening outside the Bay Area. Classic example is we leaned into India in 2017 when the global VCs were there only in 2021. So we had a huge sort of lead, if you will. So we really also lean into, and the other thing is that it's one thing to train data and to sort of have data sets, but it's also another thing to lean into it, because it also takes conviction to be able to sort of listen to what the data is telling you. That, I think that sort of being able to build that complex problem and then lean into it heavily, and therefore become geographically agnostic and also become thematically agnostic, has really, really helped us in also our returns, because that's what has driven the returns. Because it says when we I think our poor performances have been when we have not listened to the data and we have tried to sort of juxtapose our own personal views and biases onto the data. Our first fund and second fund have performed phenomenally well. And those returns really matter, because that's what the LPs are essentially looking for. And it has been difficult it was very difficult in the beginning to sort of, we were completely disrupting VC as you saw it. We weren't even meeting in our first fund. Most of the founders that we invested in, we had never met. The second fund too. And it became the second fund. It was just so that it coincided with the pandemic. And so it became more normal for people not to have seen founders when they invested in them. But even our first fund in 2014, most of the founders we had never seen. So this is a real disruption in VC way before the time of pandemic and things like that. So I think the LPs have slowly sort of gotten used to it. It was the hedge funds that were doing it. And that's how we decided that, if the public funds are doing it, why can't we? And what are the nuances there? And so that's what was the complexity of the problem as well, in addition to the big data. But now more and more VC funds are doing it, and the competitive landscape has grown. It's very difficult for a VC fund to have a presence everywhere in the world. And in fact, it's also that things shift. For example, Southeast Asia is hot, but MENA is also, Middle East and North Africa is really, really one of the best places to be in. And then there's Africa, and then and then LATAM keeps getting hotter and hotter. So it's very difficult to scale teams across. So to be nimble and to be able to do it, you really require a data advantage, and more. And so most global VCs now want to have that data advantage. So it is not really It's not, I think everybody has to have it now. And more folks are investing a lot of money into data teams. People understand investing over Zoom. People understand, being sort of sector agnostic. People understand being geographically agnostic. So all of the things that we were sort of trying to disrupt quietly and, with LPs now is, sort of mainstay. And so that competitive landscape has really helped us.
Can data look at all the numbers, but can it look at the behavioral patterns of founders? Is that the only drawback for you when it comes to understanding whether a startup works or not?
When we started this, we realized that there was going to be a difference between, between publicly available data, with the hedge funds and the public markets, and a private company, VC sort of environment when you use data. So data gets us a long way. But we always talk to companies, and it's just the initial reach out. It's a deal flow, as we call it. And then after that, I think it's the more traditional VC approach. After we make contact with the company, we get the numbers, we get to know the founders, because that's a very, very important part of the investment process.
Yeah, come in, immediately hit by COVID. What are some of the things that you did in 2020 till now? I mean, the world's now coming back. What are some of the changes that you saw in the startup ecosystem vis-a-vis the VC ecosystem?
It has been a fundamental shift in the way that investments are made, in the way that people think about global funding, which India has been, at the very actually many ecosystems around the world have been lucky recipients of global VC, really sort of taking on because of the fact that people are able to sort of make investments remotely, much more so with conviction. The pandemic was an interesting time because what felt like, March 2020, I remember it hit and, people just froze. People were trying to sort of, decide how they were going to approach investments. And then there were certain sectors that did really well, and there were certain other sectors that did phenomenally well, whereas, the other sectors did really badly. For us at Rocketship, the data was very robust, and it immediately gave us a feel for what was working in which sectors and what was not working. It was almost real time for consumer companies, and it had a little bit of a lag for B2B, but even that was really, it was fast. I was in a I was very lucky to be at a place like Rocketship, having sort of data to guide us, make the investments, because we had real time feel from the data on what was going on in the ground. I think that as we have approached now another new bend, we speak currently, the data is still very reactive, especially, you can see it in the data, you can see it in the valuations, you can see it just in the market now. Rocketship has always now been in the, business of finding alphas in a world with froth, because data really can again tell a very clear story, and it can demarcate, what's true, what's not. And so we found ourselves in a very advantageous position through this pandemic, and as we come out of it to something now completely different. Yeah.
How would different leaders in all these companies react to your grooming during the COVID? Some thoughts and takeaways on this, because I believe the COVID must have hit a lot of the early stage entrepreneurs, not so much perhaps Series B guys.
Candidly, COVID actually affected sectors and not stages. There were certain sectors that were really, really badly affected during COVID. Hospitality was one of them. We've had certain startups that have had a lot of headwinds, and so it was really sectors. And those sectors, we asked them to hunker down, to sort of, cash was king, sit down on what they raised, build the product, sort of go back to the drawing board, and just keep building, and to spend time on things, on not growth perhaps, but all, just product perfection and things like that. But there were other sectors. If you even were very, very early stage, if you were a fintech, which, it was one of the wildest times. Be it a seed stage or a Series B, Series C, it was just out of, it was just out of control. It was just a phenomenal time. EdTech was another sector, which had extreme tailwinds. So so I think the grooming really was for the sector specific startups that were going through, a significant amount of headwinds, versus, the others that had a huge amount of tailwinds, which is different to what we're seeing now. So there was nothing to do with valuations, nothing to do with, it was nothing to do with the financial markets. It's all to do with responsiveness, to what was going on, which was why it turned out to be sector specific and not state specific.
The world is running around crypto. There's no data, but everybody says that's the future. India talks about 100 unicorns going to 200 unicorns. Some of the things advised to founders on why you need to focus on fundamentals of business rather than the narrative and selling that narrative for your product.
This narrowing of the narrative and the fundamentals of the startup it has become very real now in the current times, where when capital is tight, it is usually the time when the narrative is not as important as the operational metrics and the fundamentals of the business. So that is what you're going to see more and more now. It doesn't matter which space you're in, be it crypto or Web 3.0, or there are very, very few spaces, fintech. There are very few spaces that are going to escape now the fundamentals. The narrative is not going to trump out the fundamentals, is where I think we have landed finally. There are no more premiums. I think the good, but to be sort of also fair, startups and the entire ecosystem is built on dreams and is built on sort of pipeline dreams, and that should never cease to exist. There should be dreamers, there should be narratives, and that's what really leads to all the the good to great stuff that we see. But I do think that so the narratives are always going to be powerful, and you're not going to sort of because sometimes the best startups are built on narratives in difficult times. And I realize I'm one of the first ones to realize that. And I hope that happens now as well. But I do think it's going to be difficult to sell a narrative without sort of fundamental thought. Even if you don't have the metric, you really need to be thoughtful about how you're going to build something out, and just what you think, the future holds and things like that. So, but for us as folks that are data driven, you will see the narrative stories far and few between, because you really have to have traction, you have to have some traction, and the data will tell that. So even that sort of the world there also narrows, which is fantastic, because we then really see the signal to noise ratio is clean. So on one end, good narratives are going to win. On the other end, I think a lot of good fundamentals, good operational metrics, good business building, good margins, good, just sort of healthy books, that's also going to win. So it is an interesting time. And
what's the role of the CFO and the CEO together? Because I think the early founders will be the CEO, CFO themselves, or they'll get somebody new. Your thoughts on how leadership should play out in a tech-led future?
I think, hiring good teams and hiring the founding team and in the first layer around the founding team is one of the hardest problem in any startup. And folks that are able to do it well are the ones that end up sort of, going miles ahead of others. And that is such a fundamental sort of, it is a fundamental building block, if you will, of a startup's growth, of a startup's success trajectory. There's really no one size fits it all answer here. That's the beauty, and that's the organic beauty of sort of how startups are built, and how they succeed. I've seen so many stories where there's hired CFOs that work out really well, because you have an extraordinary product, a CPO and a CEO, or or a CPO and a CEO that's one and same person, and then there's a great CTO. The dynamics of what works in these in these startup sort of, I think the C-suite is really it's magic. You can't recreate you can't sort of you can't simulate it all the time.
It's such a pleasure talking to you, ladies and gentlemen. This is Madhu Shalini Iyer of Rocketship.vc. Thank you so much, Madhu Shalini Iyer.